Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khenka. Well, over the next 30 minutes, we'll be talking about all the stocks in focus, the sectors to watch out for today, as well as we'll be getting your queries answered by our expert on the show. But before we do that, let's take a look at what the headlines are at this hour. Well, US stocks closed lower, dragged down by the Nasdaq. In fact, Google parent Alphabet shares slump after an event to promote its AI chatbot Bard. Meanwhile, Disney surges in trade after hours on an earnings beat and a massive restructuring plan. And Asian markets opened mixed, with the SGX Nifty indicating a flat start for the Indian markets. The MSCI says that it will review and implement changes to free float of Adani Group securities after receiving feedback from market participants. According to Bloomberg, the Adani Group will also prepay a $500 million bridge loan due on the 9th of March. New age tech firms have seen a solid rebound, with Paytm and Zomato clocking a delicious rally. Have these stocks bottomed out, and is it time to buy into these stocks? Also, stocks in focus today are L&T and Adani Power. Well, we're now joined by Abhishek Jain of Arihant Capital. Good morning, Abhishek. Good to have you on the show. Before I come to you for on your views on the new age tech stocks, I want to get in your view on the Adani Group of stocks. This morning, MSCI has said that certain investors in the Adani Group securities should not be designated as free float any longer, and it is reviewing this status. Do you expect this to stall the kind of comeback that we have seen in the Adani Group of shares over the last few days?
Ma'am, we may see some impact on the morning, or maybe the announcement comes, but I think some of the companies like Adani Ports or maybe NACSU and Ambuja, I don't think so there will be any fundamental impact, and won't be any liquidity related issues also. Also on the Adani Enterprise, we don't have any coverage on any other stocks apart from these three stocks, and we believe there is we've been cautious on we don't understand the valuations of those other companies also. So we are maintaining a positive view if any opportunity comes. Obviously, there will be some MSCI selling in some of the stocks, but I think Adani Port is a well liquidated stock. Same with ACC and Ambuja. So I don't think so in these three stocks you are going to see any substantial change. And if any given opportunity is there will be an opportunity to buy for the investors.
Right, well, that's the call on Adani Group of shares. Speaking about the new age tech firms, we've seen quite a bit of rally coming in on shares of Paytm. In fact, even the likes of Policy Bazaar and Nykaa saw a steady up move in yesterday's session. Do you feel that some of these new age tech firms have now bottomed out, and it actually makes a case to buy into some of these stocks?
Ma'am, actually, just for information, we have initiated longs on Paytm at 450. Our view was on Paytm was very clear that they are building on the distribution model, which is doing very well. If you see the last quarter run rate, if you analyze those run rates, at present they are doing a monthly takeaway or annual takeaway of 40,000 crore, which is very big in nature, and there is no risk on the balance sheet right now. Because they are partly a distribution model, and the takeaway rates are around 4.5% right now, which are very good right now for the companies. So our view is basically now the discounts obviously, and even for the distribution side, they are doing extremely well. Across the segment, we think Paytm is expected. They've already on the pre-ESOP break-even they have announced in this quarter, and I think you're going to see much faster ESOP adjustment break-even also. Maybe in FY25, the market is estimating, I believe, in the early part of FY25 or maybe a late 24, we can see in those kind of sustainability of distribution we are seeing, and we strongly believe at some point of time in end FY25 or early FY26, the Paytm will break even, and earnings are going to see substantial. So we need to understand the business model of those companies, and some of the business model of Paytm is much more superior than the peers in the tech space. It's like any of the few companies right now. So, and
Abhishek,
we still believe the kind of penetration.
Sure. Please go on.
So the penetration we have seen in companies like the Paytm has a base of 335 million subscriber. You are giving an opportunity, and whenever these issues with the RBI is likely to be solved about the new investment of the payment bank side also, you are going to see one bigger opportunity for this thing right now.
Right.
Still the penetration level is on the overall presence of Paytm is close to 4% on the BNPL side, or PL at 0.8%, or merchant loans at 5.2%. And they have steady tie-ups with some of the banks right now, which they are doing very well in especially on the distribution side. They are becoming a distribution mammoth at this point of time.
Right. Abhishek, what are the targets that you are working with on Paytm? Because some of the global brokerages have pegged a target of 800 and 1150 on these stocks. So what are the kind of targets you're working with on Paytm?
So our price target was actually, it was a tactical buy. We have advised the clients and achieved yesterday at 675. However, we continue to believe these kind of business model need to have a certain kind of weight. You have to wait. I won't recommend, like if someone is holding a stock also, at this point of time, I would say, okay, after this rally, you can have a small like use rather than buying and jumping into buying at this point of time. I think one can add on declines at this point of time. But our view is basically Paytm is going to be one of the largest. I think you see Bajaj Finance, you make comparison, they are doing a 60,000 distribution annual run rate, and they are per quarter, and they are getting a very good like, and their Paytm is at 40,000. So you can make comparison how they are doing at this point of time.
Right. Abhishek, let's also talk about Zomato. In fact, the CEO has just dropped a hint that even they may turn profitable soon enough. The company is reporting its third quarter earnings today, and expectations are that it will see double-digit growth in sales. Do you expect the company to turn profitable as soon as this quarter?
Profitable, ma'am, I don't think so. We think Zomato will be profitable sometime in FY 25-26 only. As per our expectation, we don't see Zomato to be profitable maybe this year. Zomato, I'm expecting sometime in FY 25 or FY end of 24 or 25, we are going to see profitable. Our concern, one on the positive side, they have bring back gold. Zomato Gold is back, which was there doing very well right now, and whatever the early stances was there, they were doing very well right now. From a Zomato Pro, which has 1.8 million subscribers, now they are turning into Zomato Gold, which is I think which was very well accepted by the market at that point of time. And right now, Zomato Gold membership is largely for the invite only, and this is for the certain customers only, as per our understanding. But people are at this point of time, people are looking for opportunities. I think in the distribution model, food distribution, there are only two players. There's already been a consolidation we have seen, and this consolidation, the problem with the industry itself is right now is like Swiggy has become very aggressive right now, because I think they are looking to raise some money, and they want to show some kind of top line numbers. So especially on the tier 2 cities, we have seen Swiggy has become really aggressive, where the Zomato has uh, uh, been, despite all the challenges, has been the core focus is on the profitability. And I think we may see Zomato in next, if you have these companies, if someone, like as per as an analyst, our view is basically if someone wants to buy, you should have a 3 to 5 year or at least 5 year horizon to add those things. But discounts have increased especially in the tier 2 cities, and we may see that once you're getting into the tier 3 and those cities also, where the aggressive, so discounts will increase. But I think at this point of time, we'll definitely have a look at Zomato is Zomato or Paytm or maybe a Policybazaar, which have been the leader in their segment, are our picks in the segments.
Well, so those are the picks that Abhishek is working with. Well, thanks a lot for taking out time and joining us this morning and sharing your thoughts on the new age tech firms. Let's also get in Jay Thakkar of Sher Khan on the show. Good morning, Jay. Good to have you on the show. Just want to talk to you about the trade setup this morning. SGX Nifty is hinting at a positive but flat start for the Indian markets. And yesterday we managed to shut shop above that 17,800 mark. What are the kind of levels you're working with on the Nifty for today?
Hi, very good morning to you as well. I mean, I would say, 18,000 in today's trading session is clearly showing the resistance on the upside as far as the derivatives data is concerned, and we believe that probability of Nifty expiring this weekly expiry above 18,000 is difficult. I mean, if that happens, so it could be definitely a good push, and thereafter, we can see further short covering till 18,100 on the intraday basis as well. So my strategy would be that one can buy 17,900 call, sell to 17,950 calls. That's a ratio spread where you'll get a net credit. The break even or the stop loss would be above 18,008 or 18,010 levels out there. And if at all expiry is between 17,900 to 18,000, you're going to get maximum profit at 17,950 for almost 2,500 to 3,000 points. There's a good risk reward of almost 1:5, 1:6 out here. So I'm seeing a range bound expiry today, but then there can be good action. As far as the financials are concerned, I mean, Bank Nifty and FIM Nifty, both of these indices, 41,500. There is where we have seen the maximum build up both on the call and put front, and I believe that 100 points on the either side. I mean, above 41,600, you would see a good momentum or activity in the 4100, 41,500 in the money strike, and same goes with the 41,400 bigs. You will see a good activity in 41,500 put. So either side, you see a 100 points breakout on the upside or a breakdown on the lower side on Bank Nifty, you should act on 41,500 strike. And similar goes with FIN Nifty. I mean, there's the level of 18,500. So 100 points up or down, if you see a breakout or a breakdown, you should act on the 18,500 strike out. Then you'll see a good momentum. But as far as Nifty is concerned, let's expect it to be a range bound trading session.
Right, expect a range-bound trading session going into trade today. Let's get in some stock-specific thoughts Jay. My first stock is L&T. Now, this company has bagged a 2,500 crore rupee order from the Defence Ministry for modular bridges. Now, we have seen a capex push being announced in the budget. So, in light of that, what are the kind of levels you're watching out for on L&T going forward?
Right, see, L&T on the day of budget and post time, it had actually shown a good recovery, I would say. Despite the budget day, we saw that sharp profit came from the higher levels. L&T was one stock which closed in the positive territory, and since then we have been seeing that it has never closed below those levels of that of budget day. But now I think that in yesterday's trading session it happened so, and that indicates that whatever budget news we had seen seems to have been discounted in the price, and hence we saw that price closure in yesterday's trading session below the close of budget day. And I expect that the bounce back or a short covering that is over for the short term. 2180 on the upside is now a very clear resistance, and further upward momentum will be only about 2180. Else we can see this stock correcting until the levels of 2070.
Right, so those are the levels to watch out for on L&T. But staying with the cap goods space, we have a query from Yuvraj, and he wants to know your views on BHEL. Now, over the last 1 month, I think BHEL has lost somewhere around 7% or thereabouts. What would you advise investors to do with a BHEL now?
I would say that, I would say that BHEL has, technically provided a breakdown from what we call a head and shoulders back. So, the momentum is a bit oversold, and we have not seen this breakdown coming with volumes. And then there can be a failure in this breakdown as well. But then the pattern is still there. So till that pattern is not negated, I would not buy this. So pattern would be negated above the levels of 80. Yesterday's close was somewhere around 76. So BHL for me would be a buy, a fresh buy only above the levels of 80. Now what if someone is already holding this? Then I would say that definitely one should exit from this, because it has provided this pattern breakdown, although with less volume. So the confirmation from the volumes is not there. But still, if one can exit right now, and if it breaks above 80, one can re-enter, and thereafter, that would be a larger trade above the levels of 90 as well. But if phase 2 surpass 80, there can be a good amount of breakdown, which can get this stock down to almost 69 to 70 on the immediate basis, and then after even 66 levels.
So exit at exit at current levels and re-enter at lower levels is the call from Jay. The next query that's coming in is on Sterlite Technologies. Manish Khedkar has written in, and he wants your views on the stock. Now, the stock was did fairly well in yesterday's session. It was somewhere around up around 2% or so. But over the last 6 months, it has gained 18% or thereabouts. Would you expect this uptrend to continue, and would it warrant a buy at current levels?
Nandita, I would say that since September, this stock has been trading in a very pretty narrow range. Although can turn out to be a larger range, and the range is almost of 150 on the lower side to 190 on the upside. So you can round off to 150 and 200, and that's 50 points range. I think whichever side provides the breakdown, the breakout. I mean, I think the probability of this breakout is on the higher side. But till that doesn't happen, there is still a possibility that it still further consolidates within this range, because I've not got confirmation that whether the consolidation is got over. So if it comes down to 150, 160 levels, definitely buy. Thereafter, there's a probability of it at least going towards the upper end of the range of. Then the momentum in this stock would be only about 200.
Right, buy around levels of 150 or 160. Hope that answers your query. The next query is coming in from Parth Chaudhary, and he wants your views on Indian Oil Corporation. This stock has not done much in the last 1 month. It is down somewhere around 1% or thereabouts. But what is your view on the entire OMC basket at the current juncture? IOC, BPCL, HPCL, which is the one that you would advise investors to buy now?
IOC has seen a good recovery, I would say, from 65 levels, and thereafter it went to 85 levels, and now back to 80, 79, 80 levels. So a good amount of short covering or a bounce back has been already seen, and there can be now some consolidation. But then, if at all I have to recommend something, then it would be BPCL. Long-term charts, I see one thing that BPCL seems to be a good, larger symmetrical triangle pattern, Nandita. So even if at all there is a fall going forward, I don't see this stock going below the levels of 250 on a long-term basis. On a short-term basis, I believe that it can consolidate within a range of say 300 to 350 on the upside. So that's a 50-point range for BPCL. But then if it comes to the levels of 300, then buy, or else if it provides a breakout about 350, then definitely buy, because it's somewhere forming a base reversal pattern, which is an inverse or a reverse head and shoulders pattern.
Right. The next query is coming in from Maheshwar Banu, and he wants to know your view on IRCTC. Now, the company is reporting its earnings today, and if you look at the stock, it has come off quite a bit from its 52-week high of 860 levels. After a fair bit of run-up, these rail stocks did come under pressure. So what would your long-term view be on some of these rail stocks?
Overall, the budget was very favorable for the railways, and it's been highest, I would say, allocation to the industry as well. And short term, we have seen some bounce back coming in IRCTC, but then it's just that the momentum is a bit oversold, so we can see further bounce back. Major confirmation on IRCTC only would be about 655. I mean, if that levels are surpassed, it's definitely a buy, I would say, Nandita. Yes, about 655 you should buy. Feeling to surpass 655, there can be further consolidation or correction until the levels of 600 on the immediate basis, or it can even stretch it to 585, 90 levels.
Right. Hope that answers your query, Maheshwar. Moving on to the next one. This is from the chemical space. Prabhu wants to know whether he should buy GNFC or Deepak Nitrite at current levels. Which one would you advise him to buy?
See, GNFC has fallen quite a lot, and yes, yesterday's move was quite sharp, I would say, and it has formed a nice bullish angle pattern as well in yesterday's trading session, which is a bullish reversal pattern. And with that, I believe that yes, it has come with increase in volumes as well. So 515 levels should hold out. So one can definitely buy GNFC. It's reversing from quite an oversold territory, I would say, and it seems to be completing a good 5-wave declining structure as well. We can see a bounce at least in the levels of 570, 585 on GNFC. See, as far as Deepak fertilizers is concerned, this stock too seems to have corrected quite a lot. But then, like GNFC, I have still not got any confirmation on reversal out there. So clear-cut reversal is on GNFC. You can buy at current levels. Even if there is a dip, you can buy. Instead of 515 would be a stop loss.
Right. The next query is coming in on HDFC Life. Abu Bakr Jassim has written in and he wants to know your views on this stock. Now, some of these life insurance stocks got hammered out of shape after the budget announcement, but yesterday, most of them staged quite a smart comeback. HDFC Life, in fact, was up somewhere around 5% in yesterday's session. How would you view these counters going forward on the charts, Jay?
Definitely, there has been some bounce back in yesterday's session, Nandita, but then I don't see a clear-cut reversal out here. So it's just that it has reversed from a bit of oversold territory. The volumes were good in yesterday's trading session, but then are not the chart structure itself is not that convincing for me to go and say that you can buy this, and there's a very high probability of a long-term or a medium-term reversal out from these levels. So the risk reward for the medium to long term is still not favorable, and there are no such confirmations as far as price patterns are concerned. So I would like to say that if there is no position, one can avoid buying this at current levels, and if at all you have, utilize this bounce back as an exit, as there is a good chance that you can get these stocks at a low levels as well going forward.
Right. The next query is coming in from Chandu Vutukuri, and he wants to know whether or not this is a good time to buy into cement stocks. Would Ultratech be a good bet at current levels?
Definitely the kind of capex push the government is talking about. I mean, cement sector is one sector which definitely will gain momentum and will be benefited out of it because of the capex, continuous capex push. And now we have reached to almost 10 lakhs plus crores now out there. And this government's focus out there is also quite visible at ground levels as well. In either metros you go, maybe travel across the India, you see that activity is happening. So that's a positive thing. I mean, it's just not coming in the budget. So definitely this is one sector, Nandita, fundamentally, which will definitely perform going forward in at least a couple of years. Technically, Ultratech, yes, is one stock, I would say, which has clearly provided a breakout from an inverse head and shoulders pattern. It's been revisiting those breakout levels again and again because of the volatility. But then I would say, for a longer term perspective, Ultratech definitely has a very good chance of an upside. It seems to have seen a good correction from the levels of almost 8,000 to 5,000 in the last 1 odd year, and post that it has been recovering and slowly and steadily has been making higher highs. So definitely one should have Ultratech in their portfolio.
Well, one should definitely have Ultratech in their portfolio. The last query I would like to take up on Indigo Paints. DR Meena has written in and she wants to know your views on this stock. It's come off quite a bit from its 52-week high of 2,000 rupees or thereabouts. How would you view this stock on the counter, Jay?
Indigo Paints, right?
Right. That's
yeah, it has corrected quite a lot, I would say, since IPO. I mean, the stock has been just falling, and in one way, hardly it has recovered, and technically it's too oversold. But then say that the whatever history of this stock we have, I mean, since listing, it's just falling. I mean, so there is no such reversal or no such price structure wherein I can say that it's good for long or medium term, because it had a rally and then it has corrected or taken that again. This stock has just seen a downside since listing. So technically, talking that you would see a good upside from here on would not be correct. Hence, I would like to say that if you're having it, fundamentally you can check it. I mean, if at all, it's likely to perform against its peers, then good. But then technically there are no such evidences.
Right, the chart setup appears to be weakish as per Jay. Jay, I want to squeeze in one last query on Hindalco, especially the fact that the company is reporting its earnings today, and Novelis, its arm, reported a weakish set of numbers, and we all saw Tata Steel also swinging to a surprise loss in the quarter gone by. In the wake of this, how is Hindalco looking on the charts? And we have a query from Ramesh Dwivedi coming in on this counter. What should one do with this stock now?
For the short term, Nandita, I would say that wherever you see a bounce back on any of these metal names, you should use as an exit. Definitely, all of these stocks have seen a good run up. I mean, we have seen that weakness coming in dollar 112, 113 levels to almost 100 levels. But then since then, dollar has bounced back and bounced back quite sharply. It's been, it has taken a pause since a day or two. But then the short-term trend seems to have reversed there, and that will negatively impact this commodity stocks. It clearly has that kind of an inverse correlation, and we have seen a decent bounce back from 300 levels to almost 500 levels on Hindalco, and then since then it's been correcting. So this price structure is not that convincing. In fact, I would say, Nandita, that the fall which we had seen from 600 to 300 was quite an impulsive fall. And post that, the recovery which we have seen has been quite corrective. So there is a very high chance on a medium to long term that those lows can be revisited, or maybe this stock further consolidate. But then from here on, if you're expecting a good momentum based on the capex push by the government space, I don't see that happening as of now from the commodity space. Cement is quite visible on the charts as well as the numbers. But then there is no such evidences either fundamentally or from the charts point of view on these metal names. So Hindalco trading at around 436. It has shown a new gap down. So there is a good chance of gap filling on the upside, maybe till the levels of 445, 450 levels in the, and that bounce should be utilized as an exit opportunity on Hindalco.
Well, use any bounce to exit from Hindalco. That's the call. Well, with that, we've come to the end of this query segment. But Jay, before I let you go, leave us with some stock recommendations for the day.
Well, I have one buy idea, and I think that Reliance Industries in yesterday's trading session has shown a good reversal with a good increase in volumes, and it has, in fact, after 2 days of base formation, this stock has come out and in fact closed above the levels of 2300, and thereafter even above the levels of around 2350. So I think that in today's trading session is likely to hold on to that 2350 mark, and if it happens so, or from an intraday perspective or maybe short term, you can see a bounce back till the levels of 24 levels on Reliance. And I think that on the downside now 2320 would act as a very crucial support. So it's just 1% or 1.5% downside risk, but then on the upside you can see almost 3 to 4% bounce. So Reliance can offer a good risk reward in the short term. One can eye on the long side as far as short term trade is concerned.
Well, so Reliance on Jay's radar for today. Well, with that, we've come to the end of this edition of Morning Trade. Jay, thanks a lot for taking out time and joining us this morning and sharing your thoughts with us. For our viewers, stay tuned because coming up next is Opening Bell with Santo.